everybody. Welcome to Know Your Money. I'm Bronwyn Wayner.
And I'm Craig Finch, and we are from Growth Financial Planning. We hope you enjoy our podcast.
Hello, everybody. Bronwyn today, all the books on the table. Getting really technical here, Warren. We thought we were going to talk about company insurance, and we're going to start on key man policies.
Yeah, I mean, there's no way I'm going to understand this, but let's go.
No, it's
There
not.
is absolutely a way you're going to understand it, because I'm going to explain it to you in the best, simple way possible, but by using my notes.
So I understand it, Bron, that a key man policy. So let's take Rogue Media, your company. You've got a partner. You've got premises. You've got a whole business running here, fantastic studios, and you're a key person in this business. So if Warren isn't here, the business is in trouble.
I think so.
So the company, Rogue Media Pty Limited, could take a policy on your life. They own the policy, so Rogue Media own the policy. And if an unforeseen horrible thing happens and Warren happens to leave the earth or happens to be unable to work for the rest of your life, so death and permanent disability, the policy will pay to Rogue Media, and they would use those proceeds to replace you. So there would be a business interruption scenario where the studio wouldn't be booked because they need to find somebody else that could fulfill your role, and it might take a few months to do that, and it's going to cost the business money, and they need some working capital to get somebody in place, and they've got to pay the lease, the rent, etc. So they use those funds to pay for the loss of you. Right. So a key person in the business. So you can be a co-owner and a key person. Or you can have a situation where you're not an owner, you're working for a company and you're the super salesman there. And if you pass away or become permanently disabled, that company's going to be affected by you not being there selling.
Yes.
So that company, let's say it's a big steel company, will affect the policy on their super salesman. And if that person dies or becomes permanently disabled, the company gets the proceeds and they use that to replace that key person. That's why it's called key man assurance.
Never heard of it. That's interesting.
Yeah, it's not partnership insurance. We'll cover that in the next segment. This is key person assurance. Am I right, Bron, in what I say there?
You're absolutely right in describing that. And I think, I went to some clients of mine the other day that own a business, and they were talking about key man insurance. And I thought it would be such a good topic to bring it up because there are two important ones. One is key man, and the other one is a buy and sell agreement, which is what Craig alluded to us discussing another time.
One.
Yes. Yeah.
So the example of you is key. You know that if you're not here, it can't run like it's supposed to because you've
designed it. Yeah.
Exactly.
Yeah.
So I just wanted to maybe get into a little bit of the technical of each of these, because often people now are going to go run out and go and put this in place, but then there's implications to it if you don't do it the right way. So it can be deductible as an expense for the company.
The policy cost.
The policy cost can be. But you have to follow the 4 requirements set out by legislation.
But Brian, just on that, if it gets deducted by the company, Warren, and the policy pays out, that pays into the company and it will be taxed as well. Correct?
The payout will be then form part of their tax
It
obligation.
will be part of the income, kind of.
Yeah.
It'll have to show in their balance sheets, it will be if you're deducting the policy, the proceeds will be taxable.
Understood. Yeah, that makes sense though.
Yeah. But
because you've internalized it in the company.
Yes, you can not deduct it as a company expense, and then the proceeds will be tax-free. Because any life policy will pay out tax-free.
So you can still
depends on how you
pay it
structure
from the company, but not claim as a tax expense.
Yes, as long as you don't deduct it.
Yes, yeah.
As soon as you deduct it, then
it forms part of your tax obligation on the payout.
Correct.
Understood.
Correct. Yeah.
Yes.
Yeah.
So I don't think I need to get into the technical, what those 4 requirements
Quite a thick book,
are.
Bronwyn.
It is very thick. But just understand that if you do want it to be, I can try do it as reasonable as possible.
Do it in idiot language for me.
Okay, let me try. Maybe not
Maybe
that
not that
part.
one.
Yes. It's a bit not idiot language, that.
So I told you earlier about my playings around with ChatGPT now, and that's what I have to say to it sometimes. I say, assume I'm a moron and re-explain what you just said.
Yeah, because it's tough.
It's very technical.
So that's one side of it is the tax deductibility. Then the second part, which is quite important, is if you have this key man policy in place, it can sometimes form part of your estate. So let's say, for example, this amount that it needs to be is 5 million rand.
Yes.
Okay. That 5 million rand will go into your estate. And the other topics that we've spoken about where there's estate duty.
So it would then affect my wife.
Yes.
Even though the company was the one to do it and it pays out to the company.
Yes, because remember you get 3.5 million free of estate duty.
Yes.
Anything over and above that is estate dutiable. If you leave things to your wife, then it's free of estate duty. But this policy is going to have gone to the company.
And is it become part of my estate because it's effectively replacing me?
Yes, because it's you as a person.
Yes, yeah.
But there are 4 requirements that if these 4 requirements are met, it doesn't form part of your estate.
Okay, we need to know these ones.
These ones are the ones that I think you really do need to know. Okay, so the first one is that the policy is not taken out by the deceased employee. So you don't take
So
it
my
out.
partner would take it out.
Yes.
Well, the company still would take it out.
Okay.
You wouldn't take the company. Rogue Media.
Yeah,
Yes.
you are
would
right,
affect
Craig,
it.
sorry. But effectively, I'm not the one who's making
Yeah, you can't
the call.
say no.
Yes.
Yeah.
No.
It would come from another director.
Absolutely. Okay. The second is that no premiums under the policy was paid by the deceased employee. So you cannot pay.
Has to be paid by the company.
Yes.
Rogue Media's bank account has to pay.
Okay.
And where that can sometimes happen is I've got a policy in my name and I can't get life cover anymore. So I say, okay, well, you buy this policy from me and then that can be the policy. But I've paid some of those premiums.
So if you cede that policy to the company, there's going to be a problem.
There'll still be estate duty.
Estate duty will be paid.
Understood, yeah.
Okay, then number 3, no amount due or recoverable from the policy has or will be paid into the estate of the deceased. So as Craig explained, the money gets paid to Rogue. Nothing goes to you or your beneficiaries. That one makes sense.
Yeah.
Now this is the kicker, which is quite tough, is no amounts due or recoverable under the policy has been or will be used for the benefit of any relative.
So the Rogue can't then give money to my relatives.
So let me explain this one a little bit more, and it's to the 3rd degree. So if a company is a family company,
Right.
there'll be estate duty.
Okay. But this is not a family company.
Yes.
In your situation, yes.
Yeah.
But there's often these people where a dad starts a business and
then
now
it's-
his son
it's
comes
John
in.
T. and Sons and
Yeah.
Yes.
And they insure the son.
And they insure the son and they think that the key man policy is now all sorted. And it's not to say don't have it. It just means you need to, whatever the amount is you want to cover, you need to, whatever the amount is you want to provide, you provide just that little bit more for the estate duty that would be liable.
Right, okay.
So it's not exactly right, but just for numbers, let's say it's R1 million, do 1.2 million. 1.2 is not the exact right number because of estate duty, but just in in
Can I ask a
sense.
question? What's the criteria for someone to be deemed a key person?
Well, it's
in
normally obvious. I mean, like you would be obvious a key man here.
But let's
you couldn't. You would.
If for example my business partner, he is key to me, but he's not key in the everyday runnings of this business.
So there was that answers your question.
So then it couldn't be part, even though he's.
You could, but I mean, you are so the buy and sell is another story, which we'll talk about.
Another time.
That's partnership there. But the key person is normally, it's clearly the best salesman or the
That
technical
if that
director.
person's gone, the
that's-
income that comes into this company can't come in
So the
anymore.
company will fiscally suffer when that person's gone.
Yeah, like
Yes.
Red Bull Racing with Adrian Newey, he's a key person there. And you know what I mean? They should have insured his life for millions because, you know, he's a key person in that.
I suppose then all the Formula One teams do this with the drivers, don't they?
Yeah, that's another. Yeah, but yeah. So there's normally you know, it's normally clear. You can really see
Okay.
where there's a key person. You might have the best chef
Yeah.
in
But
the
that would be
world
made when you
in the
try and,
restaurant, and that chef is the key
when
person.
you try and take out the policy,
Yeah.
they will do their due diligence and go, that's not a key person. If it's
Yeah,
not.
they
Yeah.
it has
They'll
to go
refuse the
through-
policy. Once they've accepted the policy, they do have to pay out when that person
Oh
dies.
yeah, no. They'll underwrite. Any life company will underwrite it.
Underwrite, yes.
Yes,
yeah.
underwrite the risk, how much cover, because you also can't put whatever you like in.
Well, that's
It's
what I was
gotta-
wondering. Is like somebody just wanted to say, like, okay, the guy who makes the coffee, he's key.
Yeah.
We're
Yeah,
gonna
let's
put
do
him in.
50 million on him. No.
Yeah.
So the underwriting, the life company will underwrite that policy.
Understood. Okay.
And one of the criteria will be financial.
Yeah, they take
The
the financials.
finances into consideration. The other one's obviously the person's health. And the finances would play a big part on how much cover you can effect on that person.
Okay.
And that's, yeah. So, but I think what we try to say is that a lot of companies, smaller businesses, small and medium businesses, have key people in there. They do die. They do cost the company a lot of heartache, never mind the heartache, but the financial loss is huge. You can insure a key person in your company. Look at that seriously and also get your financial planner involved to make sure that the agreements are in place properly, that it's structured correctly, the cover's properly put in place, and make sure that the family or the person who's the key person, their estate is also looked at to make sure it's a properly
It's a
structured.
bigger picture than just the company.
Yeah, it's got to go to exactly.
And there's
And I just wanted to say
Lots of notes about that.
how does it count as a family company? So it's not to say that you can't have this policy. It's just if you do and it is a family company, put 20% more for the estate duty. Okay, so it goes to the third degree. So it's constituted as a family company if it's mother or father, grandmother and grandfather, brothers and sisters and their spouses, nieces and nephews and their spouses, uncles and aunts, sons and daughters, grandchildren and their spouses.
but not the grandchildren's children. No.
Yes. So then it's not a family company. So
Yeah.
it's quite broad, but
That's a
just
lot,
to
yeah.
understand that,
Yeah.
because otherwise there's this huge implication on that person's estate planning, which you don't want to do.
Yeah.
Interesting.
Did
Good.
that make sense? Was it dumbed down enough?
Well, with me traveling soon, I think we got to do that, yeah.
Yeah, for sure. It's so important.
Got to know
Cool.
Joseph's going to be okay, guys.
Yeah.
Exactly. Thanks, everybody.
Thanks so much.
Look forward to
Thank
the
you.
next episode.
Thank you.
Thank you for listening. If you have enjoyed this podcast, would like to subscribe, please visit our website www.growthfp.co.za. The information we have provided in this podcast is our personal opinion. For more detailed information, please discuss your financial situation with a financial planner.